And next, we have a conversation with Terry Duffy, CEO of the CME Group, and he's also the group chairman. Terry has been a great friend of the Psaros Center, and we're absolutely delighted to bring Terry back and welcome him here to Georgetown. And this conversation is going to be moderated by our dear friend, a Georgetown alum, Guy Adami of Fast Money CNBC. So please welcome Mr. Terry Duffy. And
thank you, Rena, and thanks everybody for being here. It's always fun to come back to one of my favorite places and to speak to one of my favorite people. I'm a class of '86, all three of our kids went here, and I will tell you, if you're a student at Georgetown University, congratulations, because for my money, it's the best school in the country, so give yourselves a round of applause. We're going to do Q&A at the end, but I want to limit the Q&A to any students that are in the audience, so just bear that in mind, please, and try to be respectful of that. And as we get started, I want to say I started in the business in 1986, and I met a gentleman named Terry Duffy, who in 1986 was a legend, so some 38 years later, you can only imagine.
Okay.
No, listen, I'm biased, but it doesn't mean I'm wrong. And, you know, there are a lot of CEOs out there, but for my money, what Terry has done at CME Group is remarkable. He's built it into a $78 billion company under his leadership. He's been ahead of the curve at every turn, and you should feel really fortunate to have him here. So, Terry, tell us a little bit about yourself, because before we start into sort of the nuts and bolts, I think people always like to hear the background story.
Sure. Well, thanks, Guy. And, you know, I applied here, too, in
you didn't get in.
1976, but I lost the application because I knew I wasn't going to get in either. Anyway, it is wonderful to be here. I've been here before. I want to thank Rena also for inviting us back. Guy Adami is a dear friend. I've known him for many, many years. I started back in the business at CME back in 1980. I left college my fourth year to go into the Chicago Mercantile Exchange to take a job for what I thought was $56 a day. I found out it was $56 a week. So it was not exactly the highest paying of jobs, but I actually saw a future. And back then, you know, a lot of things are similar today, Guy. When you look at unemployment, back in 1980, you look at the inflation in 1980, you look at interest rates in 1980, what they were. And the path forward from a kid from the south side of Chicago was not exactly a wide one. So I met a gentleman who brought me down there, and I didn't care about the money. I said, it's something different than what everybody else in my neighborhood is going to try and do. So I fell in love with it. I never left the place. Became a member in 1981. I convinced my Italian mother to mortgage our home unbeknownst to my Irish father, so we forged his name and we got enough money for me to lease a membership on the exchange. And then I willfully blew $150,000 in the first 3 months of trading at 22 years old, thinking I had all the answers, had none. My mentor came to me and said, I'm not giving you a nickel. And I thought, shit, that's not what I want to hear, right? But what he gave me his reputation, and I gave me an opportunity to pay it back, and I did over a projected period of time. It taught me so many great lessons in life that I didn't know I was going to be applying through my entire career. Discipline. I always like to tell students, when you walk into a room, what do you see? You see a sign that says exit. Anybody can get into a trade. You know what the hardest thing in the world to do is to get out. So you need to figure out whatever you do in life, how do you get out of something? It's easy to get in, but how do you get out if you're wrong? So I always like to tell people, and I learned that a long, long time ago. So, and I also learned the one thing, and I won't bore you with the story, but I was right after the '87 crash. You know, when you started in '86, so after the '87 crash, I started to really go upside down again. This is after getting myself back on my feet. And I just couldn't make it. If the market went up, I was short. If it went down, I was long. It just did not go well. So a friend of mine said, go speak to this gentleman. I said, he's punch drunk. I don't want to hear about it. You know, he made hundreds of millions of dollars in the '70s, but he's broke now. But he was full of knowledge. And he said, you go listen to him. And you listen to him for 1 hour, and there'll be a minute of brilliance coming out of this gentleman. I think I've told you the story before, Guy. And I said, well, do I have to sit there for the whole hour? They said, you got to sit there for the whole hour because you don't know when the minute of brilliance is coming. So I sat there with my eyes like this, and this guy is rambling on about the most nonsensical things in the agricultural markets. I'm like, oh, holy shit, I'm dying here. I got to get to the bar and have a beer. I don't know what's going on. So I met my friend who was from Indiana. He had a little southern accent, southern Indiana, and I met him, and he says, how'd it go? I said, Steve, I got to be honest with you, man. I go, I don't think I got the minute of brilliance. He goes, well, what did you say? I said, you told me not to say a word, so I didn't say anything. He goes, you got it. I go, well, what did I get? He goes, you became a better listener than a talker. So tomorrow morning when that bell goes off, you don't tell the market what you want to do. You listen and let the market tell you what to do. So it gave me a great opportunity to be a better listener and not so aggressive in the marketplace. And then from there, I went on to be, back then, exchanges were country clubs. So I got involved in the country club politics. And then I became chairman in 2002, didn't like the direction it was going. And then I took it public right after, we were going to go public, and then 9/11 happened, unfortunately. We went public in December of 2002. I took it public as a very young man, so it was a lot of fun.
And you've been ahead of the curve ever since. I mean, by the way, if we make it to January, I've been on television for 18 years.
I know you have. Congratulations.
And people are still waiting for that 1 minute. That's 18
1 minute,
years
but
later.
I text
Maybe
all the
today
time.
we'll
That was
get it in.
smart. I always say that was good.
You think about the products that are traded at CME Group, and you've said this, I've heard you talk about it, but I think it's important for the audience to understand. The products you trade, whether it's bond futures or grains or whatever other commodities, industrial metals, they impact everybody's everyday life. And I don't think people realize sort of the utility that your exchange provides and the importance of what you do. So maybe speak to that, because listen, the world's always an interesting place.
It is.
More so now than ever, especially with all the products that you trade at CME Group.
Yeah, thanks, Guy. And I think it's interesting. I had the great pleasure. I'm not an academic by any stretch of the imagination, but over my career, I've got to meet some really interesting and fascinating people. And one of the great ones I got to meet was the great late Dr. Milton Friedman. So Milton Friedman was involved with CME back in the early days in the 70s, helping us create products long before my time. And I'll never forget, in 2000, 2001 or so, I was sitting with Dr. Friedman, and he said the most profound thing in the world to me. He said, Terry, he says, if we did not have futures, we would need to invent them in order to go forward. And it's a very profound statement when you think about the industry, about how we move forward. And you say, well, at the time, you're like, Jesus, I know you're smart. You're short, but you're smart. Okay, what does this mean? University of Chicago guy, and I didn't actually understand what he meant at the time until I started to focus on it on a day-to-day basis and watch the marketplace. So here's a current example why Dr. Friedman was so correct. If you look at the recent duration risks that we had in interest rates with banks, so SVB Bank goes down, Republic Bank goes down, we can all talk about B of A and maybe potentially what they have on their books and duration. They're a little bit different. There's something you cannot do in the cash market of the U.S. Treasuries. You cannot hedge duration risk. You have to have a futures market in order to hedge out duration risk. Now, unfortunately for those two institutions, they did not hedge them out. So you can see the critical nature. If they would have put hedges on in the futures market, we would not be talking about Signature Bank or Republic Bank or those banks. They would still be in business today, and that's managing risk. So let's also talk about the importance of municipals. I think people in small town America think that, Wall Street is nothing much than a bunch of thieves. I mean, okay, the headlines will tell you that might be true to some extent, but it really isn't. I mean, financial services is critically important. When you look at municipal bonds, who do you think builds the sidewalks in these small towns? It's not the people that live in these small towns in America. They are actually selling their bonds to people in New York and others, and they're selling them around the world in order to give money back to these municipalities so they can build their schools, their sidewalks, their jails, their hospitals, and whatever. So that's all the municipal bond market. And then you look at the grain markets today. After the 1970s, people in co-ops would not lend money because of the disasters in agricultural businesses unless they had a hedging plan. And now we're seeing that more with bankers and other things. So I think these are just everyday products that have become so mainstream that they are essential to the future of our country. And when you think about the U.S. Treasury market, this is what I'll leave you with about markets. The U.S. Treasury market is the largest market in the world. We know the U.S. government has $35 trillion of outstanding debt, $1.9 trillion annual deficit spend. There's only $27 trillion of outstanding of U.S. Treasuries. Of the daily trade on the futures market, we are 113% of the trade, of the average daily trade of the U.S. Treasury market, which is the largest market in the world. So essentially 13% larger than the cash. Now you think about that, you say what tail's wagging what dog and what dog's wagging what tail. It just goes to show you the efficiencies of futures and what they have become, and that we are actually larger than the US cash market of treasuries in derivatives today.
Uneasy lies the head that wears the crown, and that's you. And you think about it in terms of your tenure there, the things that you're concerned about today, you probably never even envisioned 5 or 10 years ago. How do you stay ahead of that curve? I mean, talked about your team and what you're trying to stay ahead of each day, because each day brings with it its own set of uncertainties and potential, especially in the world of exchanges, very dramatic impacts if you're not on top of things.
Yeah, and I think drinking out of a fire hose my entire career has put me in a good position to do just that. So you look at some of the instances and my friend Tim Massad, former chairman of CFTC, was a wonderful gentleman. Tim will remember a lot of this, but during the whole Dodd-Frank scenario after the 2008, I was the credible guy in the room because I was not involved in the markets, I ran the markets. So I testified 30 different times in the House and the Senate over the Dodd-Frank Act. And what I had to say was non-biased because I was not on the buy side, I was not on the sell side. And people said, okay, here's a neutral facilitator of risk management, let's see what they have to say. And Tim's, to his point, Gary Gensler, and I love Gary, Gary's a friend, but Gary said to me during congressional testimony, he said, this man stands to gain the most because of what they can do to do clearing of swaps. He said, they'll make $1 billion a year. And I looked up at Congress and I said, I'll take $200 million right now and walk out of the room. I said, there's not a chance I'm making $1 billion in this business. Commoditize it and it's going to be more efficient. But regardless, I did not support mandatory clearing of swaps because my customers didn't support it, even though I already knew the outcome. You could see where the outcome was. We just went through the biggest crisis in history. They were going to make changes. So I think when you go through these situations, when you look at May 10th, or May 11, 2010, when you see the flash crash, you look at MF Global, which was another scenario that we had disasters in our world. We're constantly drinking out of a fire hose. So I think that's, my team understands that we always need to be on guard and ready. And the most important thing for us is risk management. I told my risk people, my clearing risk people when the pandemic happened, I said, listen, I don't care what you want to make. I really don't care. Tell me the number. I'll figure if I can make it work. But I need you here 5 days a week. I cannot have you opening the door for a delivery person when we're moving $15 billion twice a day. I cannot have that happening. I cannot have you looking at screen. I need you in the building to do so. So just tell me what you need. And so I think you have to have that kind of leadership to instill in people. And I was there, and my team was there. So I think that's a big part of it, Guy.
When I was at school, Georgetown won a national championship my sophomore year. There's a saying in sports, you can't teach height, and that was Patrick Ewing, and you can't teach speed. And I wasn't here for the Allen Iverson year, but two of the best college basketball players ever. Yep. You also can't teach instinct. You have it, and you just talked about testifying. You've testified on Capitol Hill a number of times. You went up there during the whole Sam Bankman-Fried thing, and you were the only person that and correct me if I'm wrong, and I won't curse here, but saw that he was completely full of shit. And you actually said it to Congress, and they pushed back on you hard.
Real hard.
You were proven to be correct, and you get sort of indicted on the front page of the Wall Street Journal, New York Times, and you get vindicated sort of in the back fold. Speak to that whole thing, because you had the instinct that said right off the bat that there was something wrong.
You know, when you grow up in the streets of Chicago and you make something of your life and you be able to take care of your mother and your father and your family to something they didn't have, you never want to go back and you want to keep moving forward. But it gives you a lot of instincts. And when I met Sam for the first time, he asked to meet with me at a conference. And I've told you this story before, and I'm going to keep it brief. I won't go through all the nuances of the fidget spinner, the shorts, the bad hair, the T-shirt, the whole shit, right? So anyway, he says to me, I want to compete with you. And I'm like, why do you want to compete with me? And he goes, well, I want to compete with you in crypto futures. I said, you're the dumbest son of a bitch on the planet. I said, well, don't compete with me. I said, I'll give it to you. I said, I'll give it to you. I'll give you my crypto futures franchise. And he goes, well, why would you do that? I said, it's worth about $40 million to CME, but I'll do it. But here's what I want. I'm going to be the adult in the room. I'm going to clear it for you. I am going to be your risk manager, Sam. He goes, well, then I can't deploy my model. I said, the reason why you can't deploy your model is because you're stealing. And I just said it so matter of fact. And I'm thinking, okay, let's see how this goes, right? Just to see where he goes with it. And I said, And he didn't say anything. So that led me to say something else. I said, you know what, Sam, how much you worth? 26 billion? I said, I think you're full of shit, to use your words. I said, I think that you are not worth anything. I said, I think I have a bigger net worth than you, and I got no billions. I said, I got 5 to 1 odds. I got more money in my right pocket than your net worth. I said, you're full of shit. Get the fuck away from me, right? So his head goes down. And I'm thinking, shit, I got him. I got him. He is full of shit. He is stealing. Because if someone accused me, if I'm worth 26 billion and MF me like I did to that guy, I would have had a little problem with it. And he just sheepishly went down. I think he was waiting to get caught, to be honest with you. So when we testified, I started going off, and I realized that both sides of the aisle had been introduced into Sam Bankman-Fried's money account, and I thought, oh boy, this is not going to go well. And it didn't go well. It did not go well. And it was a very tough thing, but I could see, and I said during congressional testimony, 2 days prior to that hearing, some of you in this room who follow crypto will know that UST Tierra lost 80% in a single day 2 days prior to the hearing. So I used that analogy to point to the man to my right with the hair. I said, this man is going to not only lose 80%, he's going to lose a hell of a lot more than that. He's going to take a lot of people with him. I'm saying, this man is stealing. And then O'Connor and the rest of it, O'Connor, whatever his name is, he came tearing after me and the rest of it. But you could just see it, Guy. It's just the instincts. His business plan did not make sense. His lifestyle did not make sense. And I'm not a believer in gimmicks. You know, I got to know Elizabeth Holmes. It's a gimmick. You know, you can see gimmicks. Gimmicks don't fly. You know, I understand people want to do fashion. I understood Steve Jobs. I mean, okay, good. But he actually had the money. These people didn't.
There are a lot of leaders in this room. There are a lot of future leaders in this room. How important is trusting your instincts? I mean, you obviously do it on a daily basis. I think so many people fight against it for whatever reason. There are a lot of voices in their head. But, you know, when you're sitting in those seats, it's your decision, and your instincts really what are going to guide you. I mean, speak to the importance of that.
I think that if you, especially when you hire somebody or you make decisions, when you're conversing with people, if they can't find a way across the street without a seeing eye dog and they got 10 degrees, you probably don't want them. You want to balance to somebody who has good common sense and good book sense. And that's what I try to surround myself with, whether it's my board members or whether it's with my staff. So I think it's just the instincts of having good people around you to do a little check and balance that you're either correct or you're wrong. And you're never going to be 100% right, but I think the hardest thing in the world, as I said earlier, that exit sign, the hardest thing in the world is to admit when you're wrong. And I have absolutely no problem saying I was wrong. And I think when you can come to that, then you're more right than you're not.
Tomorrow's an interesting day in terms of what the Federal Reserve is going to do. Obviously, we talked about interest rates, but speak to the environment right now and what you're seeing. A lot of cross currents, more than I've seen in my, again, 38 years in the industry.
Well, there is. I mean, the whole rate market is crazy right now. And, you know, it's kind of perverse. I was saying this to my kids who are now at working age. I said, you know, I don't know if I can ever recall in my 42 years at CME where I've ever seen a situation where I've seen politicians, and I was saying hello to the senator. I didn't say this to her. She's still here. I didn't say this to her. But what is interesting is, you know, we're rooting for unemployment or to go up. We're rooting for prices to go down. Okay, I get all that, but historically I thought we were always trying to get jobs for Americans and not get rid of jobs for Americans. So the whole philosophy right now around rates is based around if we could take people out of the workforce so we can get inflation under control. And I don't think people understand that if we have full employment, prices are going to just be naturally higher. That's just the nature of what it's all about. So I think it's a really perverse world right now. And so when you look at Jay Powell, and I'm a big fan of Jay Powell, I think he's done a miraculous job of threading this very, very small needle to where he's at today dealing with it. I mean, we're at 9% inflation a year ago. I mean, think about we're at 9.2% inflation, and he's got to thread this needle. So I think it's very difficult. Everything's got a borrowing component to it that we do in life today. The leverage is amazing. So you look at just at credit card debt, you look at mortgages, you look at the national debt like we talked about earlier. Interest rates are so critically important to what we do in the world today. So, you know, I think he's going to move them down. And the question is, do you move them down 25 bips and the market says, well, that wasn't good enough, so we go down? Does he move them 50 bips and the market says, oops, he's worried about something, so the market goes down? I think he's unfortunately put the market in a lose-lose situation, which Jay shouldn't really care about that. He's got to focus on the numbers. So I think it's fascinating where the rate market is today, and it's going to continue to be a very dynamic place.
As I said, you've been ahead of the curve, and I'm going to jump a question that's invariably coming. Crypto, in terms of what you did there, the products you have. Speak to the importance of that to CME Group, but the importance of crypto in general, because I'm sure there are people fascinated by it.
Crypto is amazing, and I didn't know what the hell it was. There's a guy by the name of John Willem from Goldman Sachs who said to me one day back in 2010 or 11, he goes, Terry, you going to get into some Bitcoin? I didn't know what the hell he was talking about. I didn't know what a Bitcoin was. I mean, maybe you did it in 2010, but I certainly didn't. And the way this stuff has moved forward, you can almost see the value of it. But one of the things that concerns me about crypto is, especially Bitcoin, it's always being priced on the acceptance of it. So CME lists crypto futures in 2017. Okay, look at, here's a 150-year-old exchange just validated that Bitcoin's going to be okay. Not crypto in general, but I'll say on Bitcoin. So CME validated. Then they go, wait a minute, Fidelity and others are going to say, we're going to offer it. See, another validation. Let's get another leg up. And then we say, okay, now the SEC is going to lose a case on ETFs. A validation. Let's get another leg up. Okay, those should, what's next? The distribution of crypto is out there. There's no more validations to come. Now where's the use case? How do we get the use case into everyday lives? And I think that's what's critically important about crypto, especially for me with Bitcoin and Ether that I'm listing today as a commodity. And we know the difference between the fight we got with the SEC and the CFTC on what's a commodity and what's not. I don't know where it's going, but I also look at gold at $2,600 an ounce. And I know you and I have talked about gold a lot over the years. And I've talked about this debt. I think people are looking for diversification. They're going to take on some crypto. They're going to take on some gold. They're going to take on some silver. And they're going to take on, they're going to mix up their portfolios, which is the right thing to do. But Bitcoin's going to be a part of it. But I think you got to get away from the price of the product and get to the validation of the product. It's validated now. Let's get to the use case of the product. And how do we get it to the masses that makes sense, that we're not just in there using it for potentially bad guys. We've got to make sure it's good for mainstream.
Hopefully people are going to queue up for questions because a couple minutes I'm going to go to them. But real quick, Jamie Dimon's going to be here later, which is amazing. Mm-hmm. I mean, people say that he's the most important banker in the world. I agree with that.
I do too.
For a long time, he was not a believer, and that's fine. I mean, we have the saying, that's what makes markets in terms of crypto. I think he's come around a little bit, but speak to how you can have two such divergent views in terms of the acceptance on one hand by people that I totally admire and respect, and then sort of the, I don't know, maybe not disdain, but lack of understanding on the flip side. Can you speak to that?
Well, I think it's a lot like sports. You need to think about that. And so one of the, sports and politics and crypto, I'll put those three things together. Why do I put them together? There's always somebody really upset in the outcome of a game, and there's somebody that's really happy about it. In politics, there's somebody really happy and somebody really upset by it. When you talk about crypto, there's people that either hate it or they love it. So there's no in between on those three things. So I think a guy like Jamie, who is exceptionally smart, and I'm a big fan of Jamie Dimon, always have been, but it's still new. And I think if it was to prove its use case, maybe that it wouldn't be as ambiguous as potentially politics and gambling, right? It would be more accepted by all if we could actually see how it's going to work. It's like artificial intelligence. We all know what it is, but I don't know anybody that's not completely conflicted who's going to create the guardrails or the rules for this stuff for the rest of society to move forward. When we did the Commodity Modernization Act of 2000, you know, institutions like CME and others were very influential in writing this because we knew the business. But we also didn't have a stake in the game if it went up or down. We just cared about managing risk. So how do you find people that are going to set the rules and boundaries for not only Bitcoin, how its uses, but artificial intelligence associated with it in the rest of the world?
I'm looking around for questions, and if I don't see anybody, do I have a question? Up, this young lady's walking down. Please.
Hi. I was wondering if you have any thoughts on the growing event contract space. and if there are any plans for the CME Group to become a bigger player in that space.
So are you referring to the political events that was just being challenged in the courts
The
recently?
political events, but also just event contracts in general.
Yeah, we do have some event contracts already. They're not really a very big uptake from them. Our client base is primarily institutional driven, so these contracts are a little bit too small for them. I always say that each and every one of our contracts is already an event contract, because whether it's oil, whether it's foreign exchange, equities, crypto, when that goes up or down, that's an event. So your question is more intraday events going on back and forth. And I think that when you look at what's going on with Kelshi, which is the name of the firm that just the CFTC lost its case to, it's in the courts right now, and these are on political outcomes, mostly driven by, is it going to be a Republican House or a Republican Senate, or conversely back and forth. So that's where I think these events are going to go. I think that it's an interesting point that you bring, and whether we're going to do it or not in the broader stream, I think it's a retail-driven product, and I could talk about this all day. I think retail and institutional are going to become blurred eventually, and I think the entire gaming industry is showing that people want to be the masters of their own domain when it comes to managing their own portfolios with their phones and things of that nature. So I think you'll see more and more people that have an uptick in event contracts if, in fact, CME gets out there or other institutions get out there with more of an app-based, web-based type of system versus having to go through one of my FCM's financial merchants. I think that's a little bit difficult, several days to set that account up versus 30 seconds on your phone. So I think that's how event contracts will be successful. And those are the things that we're all working through, and to make sure we understand the pros and cons of it. I'm a big believer in walking before running. I like event contracts, but I think you got to offer them to the people that want them. And it's not the institutional base right now, it's the smaller retail base. Thank you.
Do I have any other questions? If not, I have one. Otherwise, okay, you didn't get up fast enough. I said, you're well ahead of the curve your entire career. A few years ago, you did something that came out of seemingly nowhere that now I think everybody's saying that was a brilliant move, and that was your relationship, your deal with Google. Speak to that, and how did you see? I mean, again, that was long before people were talking about what everybody's talking about now.
Yeah, mostly out of frustration, to be honest. I mean, be brutally honest, I was frustrated. I was frustrated because when you run an institution like ours, every technology development is critically important. But you can only do so many. So when you have that situation, something that you bring in that's more important, something gets to be punted out of that pipeline. And it depends who brings it in there. So if I bring it in, I punt everybody out, and that's it, Terry wants it done, so now we got to do this, or they're going to try and talk me off the ledge. And we had just acquired the next company, NEX out of London. Some of you may or may not know it. They owned a company called BrokerTech and a bunch of back office services. They owned EBS on the FX platform, so I wanted to integrate cash and futures together, and we finally got there. The problem is the technology demands are so difficult, and I was seeing this as I was starting to integrate next. I said, we can't get out of our own goddamn way here. This is a pain in the ass. I go, there's got to be a better way. So I reached out to some bankers at Goldman, actually, and I said, I want to get into one of these cloud providers. I want to show them what I believe is the future of finance. It's going to be in the cloud. And I said, I am a perfect example to help lead that. And so when I sat down with the heads of Google and a couple of the other ones, we went through this whole thing about what my vision was, and now they invested $1 billion in CME. They liked what they heard over the years. We're now integrating everything into the cloud as we go. They're building Google's building CME, the first bespoke data center, their cookie cutter data centers that they have, bespoke just for us at CME Group. So I know that they are seeing the benefits of it as well. And it'll give me an opportunity to bring products to market so much faster than any of my competitors, because this is what Google does. I run an exchange, I run a business, they run technology. So their scale is so dynamic. Their artificial intelligence is so dynamic. We have the ability for our clients to go into the cloud now and use risk management protocols on a test basis to see what's in their best interest. And they can do it in real time. So there's so many advantages of moving into the cloud with financial services, especially in the marketplace. So I'm really excited by this. We are ahead of the curve on this. Hopefully we'll have our markets in the cloud within the next year and a half or so. And one of the things I put in as a prerequisite, I said it's got to be as good and better or faster than what I have today. And if it's not, then, sorry, Google, you lose. And they owe me money, and if they deliver it and it is that, and I don't go, I owe them money. So it's a really strong incentive for both of us to make sure it works. And I'm excited about the distribution guy. I'm excited about the technology. I'm excited about the future. It gives me an ability to touch people I've never touched before with the distribution of Google. It is by far, I think, one of the biggest game changers, not today, but down the road in financial markets. Because I think there'll be a big market structure change coming, and that's a whole other topic I'd like to talk about sometime, but it ties into that as well.
We'll do it again. Terry Duffy was not in town today. He flew in to come to Georgetown University. He's flying back. You should know that. He's an absolute gentleman. It's my honor to have you here, and hopefully you all feel the same way. Thanks, everybody.
Thanks, everybody.
Thanks, buddy.